Jobs rip, Fed is clueless, and the markets look like they may have topped. What's up, everybody? Welcome aboard to Bubba's Bottom Line. Todd Bubba Horwitz with you on this beautiful Sunday. And of course, how could I not start the week off with a bad beat story in the Kentucky Derby? Although I did have the 20 as a saver across the board, but I had a big exacta with the 720, and I had a 720 all trifecta. So we'll call that a bad beat. But of course, that's what happens in life. We see bad beats occasionally. They show up, and in the meantime, jobs number ripped, and it was pretty much evident that it was going to happen. We saw Wednesday, you had the ADP payroll, which is not always accurate, but the private payrolls were up big. Our payrolls were up big, lowest unemployment since 1969. Everything, all systems are go. It's a booming, growing economy. Of course, I think somebody forgot to mention that to get this $2 trillion growth, it's cost us about $8 trillion to get there. Not very good math. You know, I think it's the old story. You get more business. You know, you want to sell more. You make it. You're losing money, but you make it up on volume. So I think that appears to be what we're doing here. We're making it up with volume. And again, I'm happy to see some growth. I'm happy to see some excitement. I'm happy to see help wanted signs. But at the end of the day, I think there's still many issues here that are unresolved. I think one of the big problems we're seeing is, we'll say, bank liquidity. Okay, again, you know, recessions, which I believe we've already started. Okay, that's first. But recessions, A, don't announce themselves, and B, don't just show up in one day and say, okay, well, now we're in recession. This is why the economists and the Fed are so ridiculous in their opinions and their thoughts, because they can't identify anything. But when you look at some of the things that are going on around here, bank liquidity drying up, that's a problem. Okay, massive amounts of debt, that's a problem. But you know, we are seeing some growth and tax cuts, and of course, the Fed did deliver their message on Wednesday, saying once again that, you know, I mean, actually, who knows what they say. I never thought they could take a straight guy like Chair Powell and turn him into a true Fed head who talks in circles and you don't understand what the hell he's saying when he says it. It just doesn't make sense. But, you know, this continued inflation battle, you know, so I think we're seeing some inflation, some deflation. I think this should be the message that we're seeing here in the market, is that you're getting a little bit of both. And the real problem is, I mean, you take, for example, farmers, okay, where the grains have gotten hammered, and of course their input costs continue to go higher. So not a very good mix. And this is why the Fed should be abolished and should be ended, because A, it is a political organization, and again, look, it doesn't matter who's president. They all want the Fed to do the thing that helps their presidency the best. I mean, again, I'm not going to criticize the current president because of what he says to the Fed, because again, he's got his other people talking about the same thing, and of course, Steve Moore and Herman Cain, who I like both of them. I was a bigger fan of Herman Cain, but of course, I guess he had too many issues, and Steve Moore, I wasn't a big fan of Steve's, but I know him and he's fine. But again, they have ideas. But again, this is where I run into the problem with these Fed heads and their ridiculous policies. Is I don't think they have a clue. That is my opinion. Okay, I don't think they understand how the free market system works. And I know we don't really truly have a free market. Again, I get the fact that we have a lot of socialism programs in this country to begin with, and we don't always have free markets. But I think that is what we are lacking here, is the true free market. Isn't it better if asset classes would simply price themselves? The market will tell you what it bears. It's no different than if you go to a flea market and want to buy something. You got a buyer and a seller, and they find a price in where they meet. You got a borrower and a lender, they find a price at where they're going to meet. It's pretty simple. But of course, with all these gyrations and all this manipulation trying to cause a bunch of stuff and trying to fix a bunch of stuff, they continue to break the model and make it worse. And I think, to me, that says there's a lot more issues out there that are going to be much deeper. And of course, look, what have we said from day one? Okay, we've been saying that the markets typically go up 8 to 9% year over year, just not every year. But we've now been up for 10 years. And again, I'm not saying that there's a time limit and that we have to go down, but there's a lot of issues that we continue to ignore. But as you watch and as you look at the market, okay, just remember, as long as the markets keep ignoring bad news and they keep spiking higher on good news, as we saw on Friday, right? I mean, I thought the big jobs number might have created a sell-off, but of course we know now that the Fed is not doing anything, okay? In fact, I think when you saw Wednesday, when there was no talk of a rate cut, you saw a key reversal pattern where the markets made an all-time new high and then closed on the lows of the day. Now, we didn't follow through on that, but again, we have, Friday we made a little bit of a higher low, so we'll see where we go from here. But I think this is what you look at, okay? As long as the markets continue to shrug off any bad news, the markets means that they're probably going higher. Now, we do think there's been a potential top put in this market, okay? But again, that doesn't mean that you're going down tomorrow, all right? So again, we are not changing our position of being long the market, okay? We are watching and realize that the tops may have been put in, but we're still not dumping and getting out of this market. We are staying, I will always stay the course with my long-term equity positions and my retirement account. But in my short-term trading, I'm not ready to say, okay, it's time to get short. But there are many reasons to believe. And of course, we've got the messages, and this is what doesn't make sense. The economy is soaring. Okay, let's cut rates. What sense does that make? Okay, that is, again, a broken business model. When you have to continue to try to pressure the dollar, and as we have said on this program, since the dollar was at 88 cents, the dollar is going back to par. Okay, and sure enough, as much as the Fed tries to push the dollar down, it continues to grind higher. Okay, we continue to make new weekly highs. Now, again, a little pullback at the end of the week, but again, you continue to watch these things go on. This talks about we'll call it the Fed's dangerous inflation game, okay, which is only creating more of a mess. When again, if you go back to the free market system, okay, and let the markets decide, let the assets decide, let the buyers and sellers decide, I think we'd have a much better idea of what was going on. And of course, we've got a lot going on with Barr and not showing up for the hearings on Thursday. Of course, I wouldn't show up either. Again, whatever side of the aisle you sit on, you have to be embarrassed by what's going on now that you have a report out and you want to go deeper now. Okay, so you have to be embarrassed watching this cartoon creep show. And again, it's in this time it is the left. And again, whenever you watch these hearings, okay, whichever side the other side's on, one side's going to be kissing ass and the other side's going to be trying to kill the person. All right? And that's always the case. So it doesn't matter left or right. This case, it happens to be the left, and the left is getting so far left. It is just absolutely a joke that we're going to spend the next 2 years in what is a better economy. Okay, but we're going to spend the next 2 years trying to figure out a way to impeach the current president versus making it better for all Americans and trying to grow. Okay, instead, we continue to watch these things whittle away. And of course, you don't think that we can't end up in something similar to Venezuela. You don't think there can't be a revolution. Well, you continue to create a lot of poor people in this country, and you will see. You go to some of the richest districts and you have some of the biggest amount of poor people, homeless, okay, shelters, go in Nancy Pelosi's neighborhood, Okay, all you gotta do is walk down the street. You gotta carry a pooper scooper with all the human feces laying around the street. So again, Venezuela, it was no surprise that they're finally getting to the revolution of the civil war there. Again, it was only a matter of time. In fact, I think it almost timed out well, but the media wanted to make a much bigger deal out of it. But I think it was pretty much decided that it was getting closer to happening, and of course, it is happening. And they will overthrow Maduro. He'll get out, and Guaido will take over, and that should do something possibly for the price of oil, which we'll talk about after the break. But again, you're seeing a lot of things that should be of concern, and this is some of the big funds are now all in to these markets. The Norwegian Sovereign Fund is all in. They're 100% in. Now again, typically when they start to get 100% in, that usually means that markets potentially are topping. So again, is this a top? I'm not going to sit here and tell you that I know that this is the top. I can only tell you that I see action that signifies things. You look at what's going on in Germany. The German cars continue to drop in sales. Those are the hottest cars, BMW, Mercedes. Okay. They're showing the global economy is melting down. Okay, it's like the Wicked Witch, right, from Wizard of Oz. I'm melting, because you're seeing this melt going on, and nobody cares, because of course the stock market continues to go higher. Which is, again, I'm not saying that it shouldn't be going higher. I'm just saying that when you're chasing yield, okay, and you have no place else to go, you have one investment that you can make today that is going to be A, liquid, B, provide dividends potentially, and C, provide potential growth. Where else are you going to go? Okay. So again, this goes back to the same thing we talk about often. If you are of that age of retirement or whatever, and you've got X amount of dollars, you want to chase yield, or otherwise you have to go back to work. Okay, and the only place to get yield is to try to get it out of the stock market, which continues to pour it in. I know there was much disagreement. I talked about this last time, but again, it is as simple as that. Unfortunately, many want to make it much more complicated. Okay, but at the end of the day, the chase for yield is always on, and people trying to make money so they can stay retired and create more money without having to dip in to their nest egg is the issue, which is why the collapse we will get the next time will be very nasty and very big and probably very similar to 2009. But again, 30 year, whatever period of time, we will be an average of 9 to 10% higher year over year when we get there. But there's always bumps in the road, just like my exact at the Kentucky Derby. We're stopped by here for a break. This is Bubba's Bottom Line. Todd Bubba Horowitz will be right back with more after the break. What's up, everybody? Hey, we've done some great webinars, and I've offered them to you, but this will be the last weekend. If you'd like to see the hedging webinar or our futures webinar, please email me at bubba@bubbatrading.com. I'd be happy to send them to you. Our futures portfolios are kicking butt, and glad that we got the last group in, because that's it now. There is no more for those. And also want to remind you about our high school program. If you want to help us out, go to Patreon, patreon.com/Bubba Trading. That's patreon.com/Bubba Trading. Now let's get back to Bubba's Bottom Line. Welcome back to Bubba's Bottom Line. Todd Bubba Horowitz with you. And of course, markets were higher last week. They did have as we mentioned earlier, they had a key reversal on Wednesday. Again, key reversal, make new highs, closing the lows. Okay, and was very ugly and very nasty, but of course they did recover. And again, we've had a number of these over the last 10 years, and none of them have actually followed through to the downside. So again, we are saying that we believe the action in the market, the trading action, is very toppy. But we are not saying is that you want to sell right here. We're not saying to liquidate, okay? Remember, I hedge, so I never liquidate my longs anyways, okay? And I've said that on air numerous times, okay? Here and on CNBC and on Fox. But in the short term, I am looking as a trader for spots to get short. But as a trader today, I am still long the market, as many of you can vouch for because you're trading one of my models. And of course, you can see that, again, there's no reason for me to say that it's over, but I do believe we're getting very close to being over. And this could have been it. Even Friday's rally might have been it, because again, if this rally that we came back on Friday fails to take out the highs, then that could signify that it is. But we will wait patiently and say when we think the actual top is in and when we think that it's a sellable top, because I think that is something that is always we want to be aware of and ready to go when we see it. But again, right now, we're going to continue to stay the same. You saw oil get hit hard last week, tried to rally, and then get smashed. Again, we think oil is going much lower. And again, you tie in Venezuela. If they bring their supply back online, you get Maduro out, and that brings the Venezuelan oil back into play. Because certainly the United States is going to want to help Venezuela if the right regime is in place. So you don't think that's going to bring more supply into play? Again, OPEC, I was interviewed, I was on Yahoo last week, and I told them OPEC's nothing but a bunch of phony crooks, okay? Because that's what OPEC is. OPEC means nothing. We produce enough of our own oil. We don't need OPEC and their nonsense. When we didn't produce oil, we were at the mercy of OPEC. I pumped gas when it was 29 cents a gallon. And I remember the first time it went to 50, my God, it was like a major crisis. And then I remember when it went to $1, okay? But at the end of the day, that was driven by OPEC because they could do that. They could create that fear and create that shortage. They can't do that anymore. We've got a much oversupply. So again, we're short oil. We're looking for it to go lower. And again, I would certainly expect to see a bounce off of 60. I would certainly expect to see some things happen. But at the end of the day, okay, we think oil is going significantly lower. Okay, again, we've been wrong before. We got trapped. I think you take a look at the gold market. Gold has, again, tried to break down. It did come back up above 1280, okay, but it looks pretty bad, okay. I'm thinking you're looking at the 1220 to 1240 level now, okay. Now again, we can change, that can change based on the pattern, okay. As you know, we were buyers of gold back in the high 1100s, okay. We were sellers up around 1350, and now we continue to be sellers on the way down until they prove. Now again, 1290 is probably the key to watch. I look at the range 1280 to 1290, but you did have a nice little move on the jobs report, okay, to the upside. The dollar, we continue to believe, is going to go to par, and I don't see any reason nothing has changed in our views there. I think the bond markets, again, I believe that what actually is happening is rates are actually rising internally underneath. And I think you're going to watch these treasury bonds fall apart, okay, which means rates are going to go higher. Again, one thing about the fixed income markets, they are big, and they can have a little control, a little say-so of what goes on here. So I think we're going to see, I think this is finally the time where the bond futures are going to melt down, which means that interest rates are going to rise, okay? But again, that is another thing that we're looking at, the other side of volatility, because the VIX is so depressingly low. And again, the VIX, although everyone wants to call it a fear indicator, it's really an action indicator. It's really a trading indicator. Because when there's an active VIX, okay, then the markets are active. Right now, the markets basically make one move, and that's it. And then they typically it's higher, and they stop. Okay, they don't get that two-way action like you had on Wednesday. You don't get it enough to make it great for active traders. Okay, so I think that you're going to see the bond futures get collapse, and that which means interest rates will go higher. And of course, we know because the Fed has no idea that it will get away from them as it always done in the past. And I can only base this on past history. Okay, the grain markets and the livestock markets. Whew, it looks like corn and wheat have potentially made good lows. I would expect wheat to probably be a little bit higher this week. I would expect corn to probably churn a little this week. Obviously trying to find a spot in soybeans to become a buyer. Now we own some soybeans, but I mean trying to buy more. But again, there's no reason to buy into a market that continues to go straight down, making new low after new low every day. Now at some point it will find a bottom, okay, and it will go higher. I'm afraid that the cattle markets, okay, and live cattle, okay, or fat cattle at one point had one of the most bullish charts you had. And suddenly, okay, they have now broken down and is now ugly, okay. Feeder cattle has broken down through support out of that consolidation band. So again, both of them have been down about 10 days in a row. So it's getting really ugly here as well. Now, I think part of this is going to be forced liquidation. I think part of this has to tie into the liquidity of the banks, and they're getting nervous. They're forcing some guys out because of the loan value. So we'll see. Again, not as confident, not as positive, certainly not a seller here. Okay, one thing we don't do, we don't sell into the hole and we don't chase them up. Okay, we are looking for levels. So we'll have to see how it trades out. Hogs look like they're just trading this big old range. We were looking for a spot to 86 to enter from the long side. And of course, they got down to 87 before taking it back off. Again, I think you're just going to see this general whipsaw back and forth. And I think, again, you got to just kind of wait your turn and wait for patience to be able to jump in. And of course, the cryptos continue to go higher, as we have said, okay? And as we were looking for an opportunity, okay? And we called it at 3,800, and now we're in the mid fives, and it looks like we're probably going higher, okay? And again, I think that this is just another sign of the disdain and other things for the Federal Reserve and for the other central banks around the world. You can see Facebook is now going to do something with the cryptocurrencies. So again, it's becoming more accepted throughout everything. Now, as we look at the jobs number, okay, 263,000 jobs. Again, what can you say? 3.6% unemployment. Now, again, obviously, numbers can be kind of manipulated in certain ways. But again, there's certainly nothing wrong with the numbers we're seeing. It's certainly better than the 110, 120,000 we have seen in the past. It certainly is headed in the right direction. Of course, there's other issues out there that are all part of it. And again, those are going to have to be resolved. Otherwise, of course, we're going to have the same problem that we always have. And of course, this irrational, as Alan Greenspan put it, this irrational exuberance that we see, because everybody knows the market is never going down again. Okay. Is there a question that we're ever going down? I mean, we may, go up every day forever. I mean, that's becoming the thinking of the street. That should be of big concerns. Okay. You crush volatility. You take the markets up every day on dull market rallies. You start to get funds and firms that are going all in. You get massive amounts of margin debt with people that are in. And all it takes is a little tickle. Okay. And you'll start to see the blocks, like the Jenga, come out of it. In the meantime, there's no reason to fight it. Okay. We don't have to fight what's going on. We can be prepared for what we expect. And that is what we're going to do in the meantime. This is Bubba's Bottom Line. Todd Bubba Horowitz. I'm going to come back with my commentary after the break. Bubba's Bottom Line will be right back. What's up, everybody? Hey, if you'd like to, join my Saturday or Monday night calls, please check them out. Go to my website at bubba@bubbatrading.com. I'm offering some specials right now. If you want to join and get my weekly commentary and trades and things like that, please go check that out at bubbatrading.com. Everyone email me. It's bubba@bubbatrading.com. And of course, don't forget about our high school investing program at Patreon, patreon.com/Bubba Trading. That's patreon.com/Bubba Trading, as we try to educate the youth of America so that we don't have to go through, well, I won't be around long enough, but so our kids won't have to go through the same crap with not understanding how markets actually work. Let's get back to Bubba's Bottom Line with me, Todd Bubba Horowitz. Welcome back. And of course, every week I give you a little bit of my commentary. And, this week it's all about the media. I am part of the media, and obviously the show is part of the media. But I think I always give you my honest opinion. I'm not trying to either psych you up or get to tell you what you want to hear. I'm giving you what I think. And I'm so sick and tired of the pundits on air trying to make this, to try to force everybody into markets by saying that they'll never go down again. And again, I think that most of them have no idea of what they're talking about. And of course, as you know, most on air, either pundits or guests, do not have their own skin in the game. They have others people's skin in the game. And the only way that they get paid is to get your money in the game, okay? Because they don't have theirs involved. And I find that kind of disturbing, okay, because again, I think they're leading, it's like leading the lambs to slaughter. I think that there's a lot of issues out there. And again, I'm not saying they shouldn't be confident and positive, because again, we are believers long term, but because most of them don't even understand how the free market system works, or how the trading system works, or how the markets work, I think that's a problem. And again, it's even if you want to go in as far as understanding valuations and where we should be. We are extremely overpriced and priced for perfection. But of course, everybody will tell you that we're going to the moon. We're going to have this melt up. There's nothing to worry about. The only thing to fear is fear itself. But as they like to say, complacency is the architecture of our downfall. And I don't think we could be any more complacent in these markets. And for the only time the pundits want you to do something, they want you to create some fear and panic. Okay, for example, in the hog markets, when they wanted me to tell them how high they were going, I said, no, this is about it. We ain't going much higher than here. Years ago, they wanted me to say oil was going to 300 a barrel, which I would not say, so I wouldn't go on. But again, remember, the stories that you're hearing reported and the way that they are reported are sometimes more staged to create either that enthusiasm or that fear, okay? And of course, you'll get the same guy on one station saying, we're going to the moon, and that same guy on another station will say, we're going to zero. So he can't be wrong. Somewhere he's gonna get it right, or she's gonna get it right. In the meantime, I find it quite disturbing. And again, as we talk about the fake news in the political world and fake news here, I think we also have to be concerned about the way the business news is reported, because many of you out there get your stuff from the business news, and that's where you help make a lot of your decisions. And I think it's embarrassing. I think it's wrong. And I understand they're there for ratings. They're there to make money. But I also believe they should really report the facts and not try to create this big explosion and all this excitement around something that may not be so exciting. This is Bubba's Bottom Line, Todd Bubba Horowitz. As always, I thank you for being a part of the show. And again, bad beat at the Kentucky Derby. But in the meantime, we'll be back tomorrow with Bubba's Daily Update, of course. And to everybody, have a great week. Always a pleasure to be with you. And we will see you back here tomorrow with Bubba's Daily Update. And for those who don't subscribe, we'll see you next Sunday with Bubba's Bottom Line. Have a great week, everybody. Thanks so much. We'll see you later.